Welcome back. True North, episode 51. We are back and we've got the crew here. We've got a whole squad. Let me turn off my screen. All right. How's everybody? Good?
What's
Okay.
up?
True North, welcome back. True North, the investment grade Bitcoin podcast, your place for everything finance, everything Bitcoin, every Wednesday night, your signal within the noise. We touch on Bitcoin treasuries, macro analysis, securitization and tokenization of Bitcoin products, and general humanity trends. We've got an awesome agenda for you tonight. We're going to get through a ton of great information. The agenda today is we're going to talk about MSTR and STRC, that entire balance sheet, how it's changed over time, volume and capital raising status, how that's going, and what we think is happening this week, because I think it's one of the most exciting weeks in the history of these securities. We'll get into STRC versus real estate. I think a lot of people are making some buzz about that. It's a great topic at the moment. Projected MSTR Bitcoin holdings over time, thinking about what does this look like if we see this trend into the future. What does the next 2, 3, 4, 5, 6, 7, 8 years look like, and how do we start to think about it? We'll talk about the What Bitcoin Did interview chatter. I mean, the name of this episode is Bitcoin Did This, so here we are. And then if there's any time left over, we will talk about recent acquisitions in the market. We've been incredibly busy. If I look a little tired and frazzled, it's not only because I've been coding up until the middle of the night, but also because we had a huge acquisition that went through here just recently this week. So a lot of things going on. We may hit on the Fed. We'll talk about credit cards, real estate, Fannie and Freddie Mac, liquidity, chaos, war, everything that goes around and hits on all of these different assets. So very unique place, very unique time. And without further ado, I'm going to pass it over to Tim for a very important announcement.
Ladies and gentlemen, what you're about to hear may be amazing, but it is not financial advice. It's for informational and educational purposes only.
All right, we're back. Okay, so yeah, this is going to be exciting. We've got a lot to cover here, and we've got a short amount of time. But Ben is back. It's been a while since you've been on. Great to have you here. And yeah, how are we feeling? What are people's thoughts? What's top of mind? I know STRC is big, huge volumes today. Where do we want to start? What are people thinking about?
You believe it's only been 14 days so far this year? Feels like a heck of a lot has happened in the first 14 days of the year. This has been crazy.
Yeah, even less trading days.
Ben told me not to sell covered calls after the 6th of January. So anyone who's on the inside is winning right now.
I'm glad to hear you listen, Dan.
I got smoked. I was counter trading you, Ben.
Oh, were you? Oh, all right.
Don't counter trade.
I guess
Ben.
I'm up 1-0 then.
Do not ever counter trade Ben.
There's a few times in my past where it would have worked out great. So, we all take our knocks here once in a while.
Yep. Yeah, so I'm going to jump right into it. I think strategy had an absolutely enormous day, and I think this is the perfect topic to start with. And let's start with the common equity, because I think this is something that's kind of flown under the radar because STRC has been the biggest topic, at least on X today. So MSTR traded $7.1 billion worth of equity today. It was the 9th largest publicly traded equity in the entire market, and it jumped up 7 companies within the U.S. publicly traded rankings. So some big movement on that front. But the magnitude here is crazy. I think over the last several months, strategy's kind of been top 20, and it's kind of been bouncing around between 15th and 25th largest publicly traded equity, which is it's a really interesting statistic. And we continue to bring this up because you got to ask why. Like, why has this stock been so liquid? And what is going on here? I know we hit on this a bit last week, but there's a significant amount of Bitcoin on the balance sheet, and you can calculate or have some understanding of a valuation in real time connected to the value of the Bitcoin held on balance sheet. It makes it a really interesting stock for a lot of people to trade. There's significant numbers of pair trades that can happen in many different directions, but it's also incredibly liquid. And so people can go in and out of it, but relatively easily. And the options market is incredibly deep. So when you see a change in volume day like today, going from top 20th publicly traded equity down to ninth, top 9 publicly traded equity, I would suspect that strategy was probably on the ATM on the common stock today, and there was probably a pretty massive day. Generally, when we've seen the really large days of volume in the past, strategy has raised their most capital. I think there was a period of time in November of 2024 when the stock was moving incredibly quickly, and it was the top 1, 2, or 3 publicly traded company on the planet. And that was when they raised, $2 billion in a day. And they were raising $1 billion a day because of how much volume was coming into the equity. So I think really important to keep an eye on not just what's happening with the prefs and the volume there, but just the common stock. I mean, obviously the common stock from a price perspective has gotten absolutely hammered, but there's still signal within the noise if you kind of peel back the onion.
Well, and do you mind if I jump in there, Jeff?
Absolutely.
Because the most interesting, and I was in the office today, I couldn't help but tweet about it, because you're seeing Saylor raise all his money at book value, right? Which theoretically isn't accretive to the shareholder. Theoretically, if you raise Bitcoin at exactly 1 MNAV, or you raise common equity at exactly 1 MNAV, and then turn around and buy Bitcoin, it's probably slightly unaccretive because you had to pay fees to the brokers, right? The people actually issuing the deal. Okay, but but if you expand the collateral base, you essentially can issue more pref. So that was the thing we were talking about last summer. It's like, okay, so if the MNAV collapses or goes down to 1 and strategy can't issue equity, was what we were assuming, then there's an upper bound on the amount of digital credit or preferred equity that strategy could issue. They can't really go beyond like a 40 or 50% leverage ratio as it stands right now. What we're seeing now is the expansion of both the common equity and the preferred equity at the same time, keeping pace with each other, right? They're both going like this. So the common equity, the collateral base, is expanding exponentially, while the preferred equity is expanding exponentially. And what this is creating is a bid on Bitcoin. And so long as stretch stays at 100 and there's liquidity and volume in the common equity, this flywheel can continue. So I've never been more bullish on. I think this is what traders are seeing in Bitcoin, quite frankly, because they're marching along lockstep. And then what can Saylor do to keep this wheel going? What if next month he jacks the stretch interest rate up to 11, right? Or sorry, it's at 11. Jacks it up to 12 or 11.25. Like, it's going to be at 100 every day, right? And so then he can continue doing this. Like, so I don't know. I think there's really crazy scenarios where we get a massive bid on Bitcoin, billions and billions and billions of dollars.
You issue stretch, and that instantly makes your common stock more exciting because you put on amplification. But what do you do when you get those stretch proceeds? You instantly go and buy Bitcoin. So when you instantly go and buy Bitcoin, that actually improves the collateral base. So the common, again, looks more attractive because you got to push the common higher in order to maintain parity of what your theoretical valuation is for the company, which gives you more potential liquidity and ability to raise in the common, which gives you more capacity to raise on the preferred stretch, which pushes Bitcoin higher. And you've got this reflexive flywheel loop, which we'll get into a bit later. But I built a whole model like thinking through this, because it is like, as one pushes higher, it makes the other more valuable, which pushes the other higher, which makes the other more valuable, which it's like just a whole circle.
And I'd argue book value common ATM, insofar as it actually puts a bid or a floor on Bitcoin, is in fact accretive to the common ATM shareholders.
So yeah, I wanted to chime in on this. So look, James Van Straten, I'll call him out, and he did a great thing. One of the things that we hear is there's no buyer of last resort for Bitcoin. And he proposed this theory online, and I agree with him, and I reposted him. I think that strategy is the buyer of last resort for Bitcoin. He buys it all the time. And if he's buying $1 billion a week, there's your buyer. He buys it at the top. He buys it when it's low. People are critical when he buys it at the top, and then he buys it at the bottom. It's like, well, he should just only buy at the bottom. I mean,
Yeah.
if he could buy $1 billion in a week, and by the way, I calculated my number for the year of what I think he'll acquire. That's where we are. So I think Stretch by itself is doing incredibly well. And I think that's where we are today. I mean, you guys, what do you think about that as an idea?
Well, this is what everyone used to look for, right? This was the constant criticism in the past. It was he can only buy it when Bitcoin's flying, right? He's only going to buy the top forever. He's never going to be able to buy anything else. And then he added a couple of additional weapons out there. And it completely changed the way that I look at this sector, right? I look at it from two perspectives now. One, when I look at the common, I look at the volumes. There is such a massive discrepancy across the treasury sector in terms of volumes trading. And I don't think people really understand how important trading volume is to being able to raise capital, right? Like you can have a good premium. If I've got a 1.6 or a 1.7 times NAV premium, but I only trade $1, $2, $3 million a day, I can't actually raise that much capital. I can't move that fast. There's a big difference between the stocks that are incredibly liquid and the ones that are illiquid in terms of the velocity that they'll achieve. The second thing is having a non-equity correlated product in your arsenal. You need something that derives its value from something else, not Bitcoin, right? The value that comes in these preferreds is in the yields. These are yield products. People want the cash flow. That's what these are getting valued on. And we're starting to see now that rotation that happens when a new product comes to market, right? So if you think about the prefs when they get launched, what happens at inception? Right away, it's going into all these institutions, it's going into all these large buyers who are looking to purchase it because it's at a discount. And something like a Stretch is incredibly appealing because what the company's telling you is you're going to be able to get this at a discount. We're going to work on your behalf to drive it up to par. So you're picking it up at a 10, 15, 20% discount, whatever it's offered. You're going to float it until you take that gain. You'll get that capital back. You'll move on to the next transaction. But the next layer of buyers are buying it because they want the tax advantage and the dividends, right? These are fixed income purchasers. So as you rotate shares out of those initial hands and you get them into the hands of the people that are looking for the yield, that want those dividends, and particularly if they're sophisticated and they understand the tax advantages here, now you've got a new holder base. And that holder base doesn't have the same capital appreciation component of this that they're concerned with, where they're looking for it to go up. If you bought it at 99.50 and it goes to 100, are you going to sell it to capture the 50 cents? Probably not, right? You want that constant dividend that's coming in. So now what happens is you've got all these people that don't have an incentive to sell this thing anymore. They want the dividend, they want the tax advantage, they want the cash flow that comes with that product. So what happens? Sellers leave the market. You've now rotated those. You don't have the same incentive you have with like a normal equity to go and sell when the price moves up because the price isn't going to move up. So what happens? You have to create that supply. So once all that supply dries up, the price can only go up, right? The price needs to move up until it finds the seller. The seller, for Strategy's case, is Strategy. You get above 100, they will sell you the shares. You can get supply above 100, and everybody knows that now. And so that's a very different type of product. So one product is going to allow them to buy not just the top forever, not just the bottom forever. It's just going to let them buy forever. And they're going to continue to accumulate, and it's going to scale, and it's going to become more liquid. And that's going to create this massive, massive bid on Bitcoin. And then you couple that with what he's doing in the common equity. And I'm not surprised at all that they're willing to sell common equity, at 1 times NAV or even maybe a little below that, because they've got a massive belief in the expansion of the digital credit market. And what they want is as much capacity to issue that as possible. What they don't want is the massive bid to come on to Stretch and they push it up above 100 and they don't have the balance sheet capacity to be able to absorb that. They have to be able to absorb that. And so that's incredibly important. So if they sold a little below NAV, you've got to look at the entirety of that transaction for whether it's going to be accretive or not. And in the end, it will be. It'll be very accretive. So the model has changed. I mean, this is a massive, massive shift. And I didn't really understand it until I was in it and just spending all day staring at this stuff now. But it's fundamentally changed the way I look at investing in the space, because it's pretty rare to be able to create that and allow yourself the ability to operate no matter what market cycle you're in. That's unique to just a couple players at this point.
Yeah, I
That's
wanted
well
to
said.
chime in. I wanted to chime in on a couple something that Ben said and something Dan said. So Dan, you were saying what happens if Stretch gets cranked up, and I was like, I thought if it traded above $100 in the last week of the month, that they would do a rate decrease. But I now just rechecked the slide, and I was incorrect. It's above $101. So if the stock, let's say it's trading at $100.50, they could pump this up to 11 and a quarter to 11.50, and that's when bewilderment. Oh my God, he keeps on raising the annual rate. But he wrote that in the slide that he would do that to continue to drive stretch. So this can go on for the next 4 or 5 months. And then if it goes up to 12%, right, then he would ratchet it back down. If it stays above 101, then he'd bring it back down again. So I had to check your number, and Dan Hillary is correct. I want to talk about what Ben said real quickly. What Ben said was a symmetry test. And what a symmetry test is, hey, Saylor can only raise money through the common stock ATM if it's accretive, if it trades at a positive MNAV, right? Or if it's at 1.5 or 2.0 or 3.0. So he's saying people he can only raise money when it's at a positive MNAV. What he has now shown here, whether the MNAV is at, let's just say it's at 1.0, that's if ceteris paribus, all things being equal, he's raising $1 billion at 1 MNAV. So that's a symmetry test. It passes both sides of it. And you're like, well, that's got to be true because we've now seen this. So that's where we are today. Do I think that the price of Bitcoin going up helps? Yeah. But what I'm seeing as an investor, it's like, you know what? MSTR is not going up. It's going down. I have other money in other places. If I want to put that in something, park it for 3 months, I like the prefs. Why? I like what Strategy's doing, and it pays the best yield return. And then when the price of Bitcoin goes back up, I use the word that Ben said, I rotate that back into MSTR or some other stock that I think will beat the pref return. So Ben, does that make sense? What I just said?
It does.
Yeah.
But the other mindset shift that I think a lot of people are lagging on at the moment is they're looking at the model when there weren't multiple tools, right? So the saying used to be true, right? You wouldn't want to use the common ATM at or below 1 times NAV, because if your only tool is common, then you are truly just resulting in a dilutive transaction. If you have nothing on the other side, that's the more, high octane rocket fuel version of creating yield. But because they have that, it changes the way you have to think about that. You can allow for some more flexibility in that execution, as long as what you believe over time is that they'll offset anything they're issuing in the common with what they're going to issue on the digital credit side of the house. And that's clearly the path that they're going down here. Now, if they've got, tools in place, you mentioned the 101, that's an important tool, but what they're really looking for in the product, I think, is equilibrium. I think they probably want to get to the spot where you find the balance where they can absorb, call it 40, 50% of the daily volume, a little bit above 100. But what they have to do as soon as they get into the territory where they've got the right amplification on, where they're comfortable at that amplification, is now for every dollar they issue in digital credit, they got to be over there issuing 3 in common to keep balance, right? So you have to keep balance in your amplification ratio out there. And right now, the moving of the rates it's searching for that equilibrium point where you find that constant sustainable bid in the market that you can just consistently absorb. And they've got room right now, right? It can run hot at the moment because they've still got the ability to put on more amplification, and there's a significant amount of capital that would still need to come in for them to get to a 35 or a 40% amplification ratio. So they can absorb a lot today, but when they get to that point, then I think they'll step back and they'll wait to see if they've reached equilibrium in that product where they can continue to absorb that demand and offset it with the issuance in the common. And it's a little more complex for them because it's not just managing stretch versus common. It's managing stretch and strife and stride and strike and all of the demand that comes out of the digital credit products relative to what they're issuing in the common, right? So you're always most likely going to see more common issuance than anything. But if they get moving here and if they keep on pushing the common equity issuance, you might find them getting under amplified, where you might see some weeks where while they've got this type of a bid coming into digital credit, they don't lay on the common equity and they just let the digital credit products ride to try to put that amplification on or at least close the gap again. So it's going to be fascinating to watch because we're just seeing the emergence that's happening in the demand for digital credit, right? This is what everyone was looking for, where you have these consistent days strung together where you're seeing demand in a product like Stretch that's keeping it pegged up there around 100. And obviously you get some of that when you come around the record dates and the ex-div dates and the market starts to heat up there. We were starting to see the demand before that. So now the test will be, after you get past that, ex-div date, what type of reaction does that product have?
I agree. And
I think you're going to keep getting shallower and shallower sell-offs on the other side of that, where it might only take a couple days for it to rebound and then the bid comes back. So it's going to be a really exciting year, I think, to watch this stuff evolve, because now we're seeing the bid come in. That means there are real dollars at the door here that are going to start to scale this thing. And you're seeing it in the Bitcoin price and the bid that's being put on Bitcoin. It's almost terrifying how much Bitcoin they buy a week, right? Like, look at what we had to do. We've been in the public markets for 4 months and we've been burning it at both ends. We did the pipe raise, we issued SATA, we did the acquisition with Semler, and we just got to, 12,798 Bitcoin, and Saylor bought that last week. Like that is, we're so numb to the amount that their purchases are, like, for how hard, we've been working to get close to what they just acquired in that week. The scale is incredible. And I don't even think we appreciate it yet.
Yeah.
I think.
Go ahead, Dan.
Yeah, I was just going to say, I think you said something interesting there, talking about where the leverage ratio, the amplification ratio will land. And that's ultimately the question. Obviously, right now, they're expanding the balance sheet with common equity issuance. But if we see a week where there's no common equity issuance, which I think this week they'll issue common equity, where is this amplification ratio going to go? And I think now with the USD cash reserve in particular, they can take this amplification ratio extremely high. And in that case, the price targets, the value of MSTR relative to Bitcoin, if Bitcoin continues to compound at an aggressive rate, are quite astronomical over a 10, 20-year time horizon. So that's what I'm really excited about, is how high can they pull this amplification ratio and take their sort of issuance of credit more similar to that of a bank or a insurance company lender or something of the sort.
Well, let's take a moment to Ben's point and think about how crazy this is. Strategy is a B- issuer credit rating. They have unrated perpetual preferred securities. Stretch alone has $545 million of volume in 3 days this week. An unrated perpetual preferred equity that's 6 months old has $545 million of volume in 3 days. Like, go look at any other bond in the market. Go look at the 40th tranche of Ford 2069 6% interest rate bonds. Like, they're not trading $545 million of volume in 3 days. Like, this is incredible. This product is literally.
Put it in these terms. At the pace they just raised last week, they will acquire the same amount of Bitcoin as the next closest public company in 1 month.
Totally. That's crazy. Yeah. This is digital credit. They're plugging digital credit into the traditional financial markets, and you're seeing how it interacts. You could say they're using a SATA cable, Ben. But yeah, I mean, these are crazy numbers, and you got to think that there's the overhang from the IPO is probably gone. They've raised the interest rates now a couple of times, and they've got balance sheet to crank the amplification higher, but they're also have got significant demand on the common stock. Like, if you're a top 9 publicly traded company and you're ranked 195th, you monetize that. Like, you give yourself more balance sheet to go issue the best product that's trading $545 million in 3 days as an unrated instrument that's 6 months old. Like, that's what you do.
Yeah. So,
This is
so
incredible.
Jeff, I want to comment on a word you said there because I don't know if people caught this. You said the overhang from the IPO is probably over. And what that means is, this is what I think it means. You can tell me if it means what you mean, is that um, Saylor decided to do STRC as an IPO. He goes to the book runners, the investment banks, said this is the new product, does his road show, and it's got a peg, it's got a variable rate. What's your appetite for it? Comes back, and he realizes it can do this amount. So they make a commitment to buy a certain amount of it. He gets the cash. He goes and buys the Bitcoin. What they don't do, and this is where the overhang word comes out, is that once they announce this and they go live on some day, they don't then dump all of the shares
Yeah.
in one day in a market order because they can't do it. It'll drop the price down. So the overhang is the amount of time from the IPO date to when they can slowly release those shares into the market. And so, given you have enough volume now to absorb all the net new shares that were done, I'm not saying the market makers or the book runners or the investment bankers don't retain some of those shares for themselves because they might like the message, right? But they're probably done opportunistically selling or whatever they could sell, and you can call it an unlock. But that is that your idea of the word overhang
Yeah.
being done?
Yeah.
Yeah,
And also, like, you got to wonder, I mean, the people that are buying this, how many actually bought it because it was priced at a discount? And how many are continuing to hold it because they're like, holy shit, they're paying the interest rate. They're
that's two different
paying
classes of
11,
buyers. When you think
like,
about it.
oh my
Yeah,
God.
but
Like, it's coming
yeah.
in. It's real. I'm
Right,
getting
that's two different
yield on
classes of
Bitcoin
buyers. I'll buy
exposure.
it at 90 and then sell it at 100.
Yeah. Yeah. That's crazy.
Also, I've been
Go ahead.
reading Taleb's. Can you guys hear me better? Is this mic all
Yeah.
good?
That's
Yeah,
much
I've been-
better. Yeah, much
Okay.
better.
I've been reading Taleb's Black Swan again. And what's really interesting is just kind of historic bias. And I think a lot of this, and I've definitely been seeing it in what I've been doing at Buck, but like, there's so much fatigue and so much PTSD from the Terra Luna, Celsius, BlockFi, Yield, all this stuff, right? And so I think there's a large cohort who really believe this is the next thing to blow. But obviously this is a public company audited by big accounting firms. The management team is liable for the actions taken at the corporation. So like, there's just a lot of things different here than in the past, but I think people still can't get over that. And then furthermore, to really understand how the preferreds work and what the investment protection is written into them, going to the website's one thing, and there's nice, helpful numbers for Bitcoin credit, Bitcoin, days to cover, or so not days to cover, excuse me, years of dividend payments, et cetera. But until you actually look into the prospectus and understand how the product protects the investors, right? What terms are written in there, such that if the yield doesn't get paid, what do investors have? What protections do they have to rectify that? It's hard to get comfortable with these products. So I think over time, there's only two ways you get comfortable with them. Either you're like us, you read the prospectus, you got comfortable with them, or you see that they've been getting paid for like 3 years, and then you're comfortable with them. So I think we're getting to that point slowly but surely.
Yeah, track record's huge, right? And for a lot of the large institutions, Matt's talked about this quite a bit, where a lot of them will require a 3-year track record before they'll be able to allocate. So like, there's still huge amounts of capital that have years before they're going to be able to allocate to these. The other thing I think I've learned along the way is we assume everybody takes a sophisticated view around all these products. And I don't think that's the case. I think these products start showing up on stock screeners where you've got a lot of people that'll just go and sort dividends high to low, and they'll do like a cursory glance. Like, it's very rare for investors, even pretty seasoned investors, to go into all these prospectuses and everything all the time. It's just not as common as we think it is. But we've just analyzed it, which is why it's so confusing to us that people aren't just crawling all over each other trying to get these products, because they're such good products, right? They've got the right protections. They've got the right mechanisms in place to make them successful. They've got the collateral backing for decades today. no requirement that the business continues to be able to go operate and, scale and do better manufacturing and have their sales team be out there being more effective and raise their bottom line by 10%. Like, the assets are there now, right? They've got them. And now they've got several years in cash to pay these are such secure products that we have a hard time seeing why people wouldn't be rushing into these. I just think we're at the phase where it's still at the point where nobody's heard of them. Right.
Oh,
we
yeah.
live in this echo chamber where this is all we talk about all the time. We think the whole world's talking about these things because it feels like that in our little worlds, but nobody's heard of them yet. Even people that you would expect to understand because of how transformative and how much capital's been going into these and how successful the IPOs have been, right? You'd expect them to catch headlines quicker, but I think they're easy to dismiss in the early days when people just go, it's a Bitcoin thing. And if they haven't already wrapped their head around Bitcoin, it doesn't move them down that path yet. But that's not going to last for long, right? Bitcoin's becoming too ingrained at this point for most people to ignore it.
That's why we do the show, by the way. That's why we do the show, by the way. That's why we talk about it every week. But go ahead, Adrian, get in there, hop in there.
These products are still very, very niche. I had to have a whole conversation with my financial advisor last week about them because he had no idea about any of them. And I had to sit down with him. I had to actually send him to the strategy website. I sent him to a few different clips that we have, and I had to walk him through it. He still didn't get it, but he's slowly coming around to the idea. But I think Ben's right. These products are still very niche. They're still very, perhaps niche is the right word, but I don't want to give the impression that they are fringe products, right? When it comes to Bitcoin, when it comes to digital credit, when it comes to the whole notion of preferred offerings by themselves aren't a huge market. So now you have something that's not a huge market in something that's very niche and still very, very niche and still very, very new in Bitcoin, even though it's 17 years in. So it's very, very hard for people to bridge that chasm because they have to take 2 steps instead of 1. And I think that that's a lot of the not the challenge, but that's a lot of the road that we still have to go on for these products to get more notoriety. But to your point about volume, Jeff, I think based on what I've been doing in my analysis, I've been running it bi-weekly. What the market's doing, from what I can tell in the data, is that they're pricing in a move in Bitcoin, and they're using strategy as a proxy for that. So the options impact and the impact of Bitcoin on the price has been kind of running in tandem now for about a month. And if my guess is that the swell in volume in MSTR is because people are pricing in a move in Bitcoin and they're using the options market and they're using MSTR to express that in the market. That's the best kind of guess that I have as to why the volume has been spiking so much in recent weeks. So I think that we are in for some interesting times.
I think on top of it, it's got to be a little bit of stretch as well, right? I mean, you've got people that have shorted the stock for a very long time, and they've been very adamant about, being against MSTR. They've shorted the stock, had no idea, haven't understood what's going on. And then all of a sudden you're like, okay, still selling common stock. Like if you have Jim Chanos's view, like you're like, I'm making the same trade as Saylor. I'm selling the shares and buying Bitcoin. It's like, well, guess what, Jim? You don't have a preferred equity. And you have this defensive mechanism where you can issue non-dilutive equity, pay the dividend, and it increases the balance sheet of your common stock and the technical valuation of the common stock. And anybody that was shorting the equity, when the dividends get paid, they have to pay the dividends. Or I think when if they were to short STRC, for example, or any of the other preferreds, they would short those equities, and then they have to pay the dividends when the dividends get paid. So they've got this like 2 pieces that are working against them. They've got the balance sheet is floating higher because they're issuing the perpetual preferred equity, and it's making the valuation framework much higher for the entire combined entity. So you got like a couple of moving pieces here.
Yeah, I've stopped spending a lot of time deciding to argue, with guys like Chanos, because what I realized over time is we are fully misaligned on the time frames of how we approach this. Right? Like there's going to be traders in and out of this thing all the time that are going to have successful long, successful short, successful everything. And they're going to do it on 3-month time frames, 1-month time frames, 6 months time frames. And the reason why I hear all the negative things coming from them, and I used to react so viscerally to it, is because I'm looking at 5 years and 10 years and going, you're out of your mind. Like, you're going to get blown out of the water. But in your mind, you're conditioning yourself to say, well, he's holding this position as long as I think I'm holding a position. And it's just not the case, right? Everyone's talking their own wallet all the time. If you've got a short position on, you want everyone on earth to be scared of this thing. You want them to think Bitcoin's a scam, Sailor's a snake oil salesman, these companies are Ponzi schemes, they're all going to implode. Like, that's what you want people to believe, because that's the way you're aligned. And then if you flip the other way, well, Bitcoin's doing well, maybe it's got some legs, and it flips. It's so, to me, the most value that I think groups, like ours can bring is you continue to hammer on the 5-year, the 10-year, the 20-year outlook on these things. Most people, when you hear about them making an investment and making huge amounts of money, it's decades that they're sitting on it, right? They place a concentrated bet early before anyone understands anything, and they just sit on it because they have conviction in the direction that it's going. And when you look at an investment like this, like, the reason why I've calmed down from having to go and argue on the internet with all these guys taking short positions is because now that, we've spent so much time looking at the impact of the compounding that happens here, right? Like, everyone's looking in 1 month and 2 month timeframes in terms of whether the yield's impactful or not. You're missing the biggest impact, which comes year 5, 6, 7, 8, right? The compounding doesn't even really start until later, right? The massive impact of it. And so for me, I get to the position where I go, if I believe in Bitcoin as an asset, and I think it's as transformative to both the financial markets, maybe as a money one day, but just a transformational asset, I'm building a leveraged exposure portfolio to that, where I put myself in a position of no liquidation risk, and I'm going to sit on my frickin' hands and I'm going to let it compound, right? Let it do the work. And I get very comfortable that way, because you've seen it, and you're investing in something you believe, and you can stop staring at the day-to-day movements in the charts. We overanalyze everything, and I've started seeing it more because obviously I'm in a company now, and so I see the chatter that goes on about our own company. And what I realized is people are speculating, and it's almost always wrong. Almost always. I've seen very few things that's been correct out there. And there's a lot of narratives that come up, and these companies admittedly are confusing to the market, because we took all the ways that companies used to operate and we threw it out the window. So things that people were traditionally scared of, like a preferred equity, was like an issuance of last resort back in the day.
It's like a bad
You
thing.
saw it coming
Yeah.
out of all these companies that were going defunct. The latest one is going to be
Reverse
these
split.
things like reverse splits, right? Like, what used to happen? Well, it used to be that a company, was starting to fail and the stock price was going down, and they'd continuously reverse split. Well, we've got this brand new sector of all these new companies that came into the public markets with a reverse merger. And what a lot of people don't understand is that your capital structure is inherited from the company you reverse merge into. So if you end up with a ton of shares out there, that's a function of the company you merged into. It's a byproduct of that transaction. So you might be trading at a low dollar value, but that's a function of that merger activity, because you have to take on the capital structure of the company that was public. So
Quite,
now
quite
you get
literally
all this,
just paperwork. Just
just
paperwork.
paperwork. But
Just
so now
paperwork.
you get all this fear that happens, because people used to hear the word reverse split and think, well, that's a company that's on its last leg. And, that's obviously happening with us right now. And I'm just sitting here going, we've got, after this, more than $1 billion on the balance sheet. We've been in the public markets for 4 months. Like, that, this is a cleanup activity that opens the doors, because what you learn when you talk to all these institutions is, by policy, they have limits that stop them from being able to invest in equities. And some of them will have cutoffs that are $2, $3, $4, $5, right? The limits are all different, but you want to make sure that you open the doors. I don't want artificial gates in front of my equity that stop people who want exposure from getting it. And so if there's a administrative activity you can undertake to clear that barrier, you do that, right? But it's new, right? Every other company that you've heard of that does these types of things, it used to be these old legacy companies that were failing, and this is a totally different thing. And so we're going to have years of all this rewiring, the way we think about corporate governance, about traditional finance, about financial markets, capital markets. Like there's a
Balance
whole
sheet.
rewiring that's happening. And the people that watch this and this group that's been in it forever, like we're leagues ahead of where most of the investing public is today. They'd come in, they'd hear these terms and they'd run away because they're hardwired to think this whole sector's got to be a disaster because they're issuing preferred equities and doing reverse splits and like all these things. Like it's got to just blow their minds. So it's a weird area we're operating in, and I think that it's still going to take quite a bit of time for a lot of investors to get comfortable with what's happening here, because it's uncomfortable in the beginning to have to challenge everything you've hardwired into yourself about investing.
Yeah, it reminds me of that podcast that Sailor's like, shaking his friends that are trading Facebook between $14.50 and $15. Like Facebook IPO'd at 38, it went down to 15. It's currently today trading at $615. It's up 15x in 10 years. It's like, what are you doing? Like, this is a monopoly. Stop trading this thing. Like, just sit on your hands. Like you if you just look at what's happening, like you don't have to do anything, but they're, everybody gets all up in their head about, short-term narratives or whatever is happening in the news. It's great.
Well, and you have to learn it too. There's cycles, right? We all went through them. Like, that's why I say in 2025, the only thing that had a cycle was the treasury sector. Like that had a full Bitcoin cycle in there, right? The treasury, Bitcoin didn't have its cycle, but the treasury sector did. And in the early days, you got to go through that to really reset and figure out, okay, now that we've gone through the excitement phase of all of this, right? And the mania phase of all of this, and we've seen all the different companies come into the public markets and how they're approaching it. Now you get that opportunity to reassess and figure out, when I sit back now and I look at everything that's out there and all the different models that are being deployed, which one do I think is going to give me the best amplification and the best long-term compounding effect? And then that's where I'm going to allocate my money, right? And every individual investor gets to pick that. You heard Saylor say it on the podcast that he did with Danny, where he said there's 1,000 different flavors of what these are going to look like, even just in the digital credit space. There's hundreds of different ways you could structure these digital credit products. And so you're going to see all these different approaches to it. And that's going to open up avenues for each individual investor to pick their flavor of amplification that they like if they're trying to get amplified exposure to Bitcoin.
Yep. Mike, you were going to jump in there?
Yeah, I was going to call out to what Ben was talking about, and Adam Livingston. He did a screenshot of all the comments on Reddit, and and look, and you got people writing, Stretch can't make it because it's 11% a month or 10% per month. If somebody doesn't have the reading comprehension to know it's an annual percentage rate that's paid out monthly, we have the choice. And what Ben was saying here is, I just don't engage with that person. I don't. It's not even worth it for me to say I'm going to grab. I can't do a FUD busting with somebody that doesn't have basic reading comprehension. And so from that perspective, I just don't have the conversation with that. And I was on a space earlier today, and this guy gets on and he was saying all these things about strategy. He did not know who I was. And I said, and they were going to cut him off. And I said, no, I think I could take this one, guys. And I went through and I said, tell me everything you want to say. And he went through all the tired tropes, doesn't like strategies, business model, doesn't like so I go through each one, and there's 500 people on the phone call, and I dismantle them all by one by one. And the guy's like, oh, that's correct. I agree with all your math that you said. Grain, real name is Mike. I go, great. You agree with all my math and everything I just told you. Did you change your mind about strategy? No, I just don't like it at all. and I want to tell you the reason why. He goes, Saylor can't guarantee that the price of Bitcoin is going to go up at any rate at all. It can go down. And I said, well, that happened. I said, by the way, can you guarantee that any other company can make a guarantee that their stock is going to go up? And he goes, no. And then I said to him, what happened in March of 2020? And he goes, "Oh, why'd you bring that up?" Because this guy sounded very sharp. He was an older guy. I said, "What happened with oil?" And he goes, "Oh." I go, "As we all know, it went from $50 a barrel. It dropped down and it went negative, a negative number." And he goes, "Well, I waited to $9 and I bought in." And then it traded negative on the futures market. And I said to him, I go, "But prior to that happening, did you ever think that oil can trade at a negative number? Could you guarantee that?" He's like, "I never thought of that." And I was like, "Why are you then, again, the symmetry test? Why are you requiring Saylor to guarantee that the price of Bitcoin is going to always go up? And we're showing you here that he can acquire Bitcoin at 1 MNAV, but yet you don't say to require all the other companies to guarantee the future gains." And I was like, dude,
Yeah. Yeah.
can we talk about the Danny Knowles interview?
Yeah. Hold on. But before
That
we
was a
go
nice
there,
segue.
but before we go there, I've got to jump into I got to jump into my screen. I'm sharing my screen here. And first of all, I want to shout out to the builders out there because there was a new dashboard that was built just I think in the last day, strc.live, and it's looking at the price of STRC, the Bitcoin price, and you can estimate different ATM thresholds, and you can see how the volume's traded every 5 minutes, and then there's an estimate of how much has been traded over the week, so you can start to calculate how much capital you think Strategy may have raised on an individual week based on the volume metrics that are happening on this particular equity. And this is great. I mean, everybody should be building. Like, this is awesome. If this came to your mind, like, cool, like, build on this. And please, people, give him feedback, and him or her, whoever built this, give them feedback. And like, these things are helpful when you're going to try to explain these to the market. And the really cool thing here is you could build instruments and dashboards incredibly quickly now. And maybe we'll get to mine here in a second, but also shout out to Bitcoin Quant. I think Rohan's working on this as well. STRC weekly breakdown, seeing total traded volume on each one of the individual days, percentage of the Bitcoin mine supply, and continuing to work on that stuff. So big shout out there, and everybody should be building because you can build easier than ever now. I'm gonna jump over to this here real quick, and this is a amplification treasury simulator that I created in 6 hours. So I've done this in 6 hours. I've had zero past coding experience outside of coding in Excel and basic Python script stuff that I've moved incredibly slowly on. So I'm pretty proud of myself with what I came up with here. And I haven't had this much fun playing on a computer since I was playing with Roller Coaster Tycoon in like the early 2000s. So like, this is the most fun game on the computer right now, is like Cursor AI building dashboards. So, and maybe it's a little small, but we're going to run through this anyway. And I came up with this because I was curious, thinking about our company, like trying to forecast, some of these metrics and instruments. And then I just asked myself the question, at what point would Strategy have $1 trillion balance sheet? And I'm like, wow, and then I immediately went to Excel and I started calculating this out. And I said, there's got to be an easier way to do this. I jumped into Cursor and I said, okay, I'm going to build a dashboard and kind of work through it. But there's so many different variables, because when we're like what we're talking about here with STRC, as STRC comes in the door, they go and instantly buy more Bitcoin, which gives them additional capacity. And if they raise common stock equity, that gives them additional capacity to go buy more Bitcoin. And as the price of Bitcoin goes up, that also gives them additional capacity, and the whole thing's kind of reflexive. So I built a simulator tool to look at these different parameters. And so what I've got over here, and guys, please jump in at any time. So I've got Strategy starting Bitcoin on the left-hand side. The Bitcoin price when I built this was 95,000. We'll just keep it there. A price CAGR assumption of 45%. So assuming a 45% compound annual growth rate. However, that 45% decays at 7.5% annually. So diminishing return of the compound annual growth rate into the future. Bitcoin holdings CAGR from the common ATM. So how much additional Bitcoin are you going to add on the balance sheet from the common stock ATM every year? And then a holdings CAGR decay as well. So understanding that there's economies of scale and you can't add, 10% more of your balance sheet from the common stock ATM every year. So you got all these different moving pieces. And then you assume a 30% amplification ratio based on if that balance sheet is able to grow into the future. Can I keep the amplification ratio the same? I'd argue probably yes, because as these instruments get rated, people understand them. The capital doors are going to blow open. There's going to be a bunch more interest in this. So I kept the amplification ratio at 30%, but you could change it. Preferred interest rate, I'll keep it at 10%. We know stretches at 11, but on a combined basis, it's roughly 10. And then the projected horizon being 10 years. So all of these different variables, and it comes into play here in this graph. So you can see, and the summary statistics are up here at the top. So based on these summary statistics, the strategy is estimated to have $1 trillion in BTC notional value on the balance sheet by June of 2031. That kind of blew me away. I was thinking about it. Okay, June of 2031. Oh my God, that's 5 years from now.
Yeah, and by the way, Dan Hillary will not even be 30 years old yet.
That's right, Gran. Watch out.
June of 2031, strategy would have $1 trillion of notional US or like USD Bitcoin value on the balance sheet. And then I'm thinking, okay, there's not a single other company on the planet with $1 trillion balance sheet. Well, that's interesting. Okay, if you can reasonably project that by 2031 that they're going to have $1 trillion balance sheet, I mean, what's that company worth? What is that company worth if you think that the product is going to sell in that much into the future, and then have $1 trillion balance sheet in 2031? And then what can the company do with it from there? I mean, if you have $1 trillion balance sheet, you're talking about issuing $300 billion of perpetual preferred equity, or having $300 billion of perpetual preferred equity outstanding. I mean, this thing gets really big. Like Saylor said the word monster. Like, I want to build a monster. That's what this thing is. And you start running some of these like kind of reasonable projections, and the numbers get just stupidly big incredibly quickly.
Hold on a second, Jeff. I want to make sure I understood you, because I listened to you. I thought I understand what you said. And then you said it'll be the biggest balance sheet. In my brain, I processed what you had said. Even though you said balance sheet, I processed it as $1 trillion market cap. That's not what you said. You said $1 trillion
balance sheet.
Balance sheet.
$1 trillion balance sheet.
I now understand. It took me literally 15 seconds for that to imprint in my brain. So what somebody would say is, if they have $1 trillion on a balance sheet, which is the largest balance sheet in the world, that's according to your analysis, right?
Yeah.
Okay. Now, what multiple would that trade at? Because it's not going to, you could say, well, it just trades at 1-to-1. You could say that, but then you said the second order effect that they could issue, if let's assume there's a decay, like you said, and last year it was 23%. Let's just assume it drops down to 10% in 2031. That would still be $100 billion that they're issuing in digital credit.
Yeah.
That's your decay from 30% down to 10%. That's the second order effect. So I didn't think about that. I thought in my head, and this is important for everybody listening, I was thinking market cap. Jeff said balance sheet.
Balance sheet. $1 trillion balance sheet.
Right. And if they only issue 10%
years.
a year, that's $100 billion. Last year, they only did, they did 25 billion. I mean, it's still awesome, right? And Saylor just posted that literally earlier today. So Jeff, kudos to you for coding this. Congratulations. And you did this in Cursor. I think
I did this in Cursor. Yeah, it's incredible. Yeah. And I will share this. I think we're planning to post this on the True North website. I mean, there's going to be a ton of disclaimers on everything. None of this is financial advice. This is just for fun and informational purposes only. But I think some really, really interesting components here. Like, obviously, so many variables, right? If there's nation state adoption, or what do we know about Bitcoin? It's incredibly volatile. If it just rips everybody's face off here and it goes to 1 million, I mean, all this model is broken. Everything's broken, right? This is assuming like a static average over time, and you can create some assumptions around it to have an understanding of what you think it means. But a couple of crazy things here. June 2031, having $1 trillion balance sheet, this assumes a Bitcoin price of 512,000. And this assumes Strategy has about $2 million of Bitcoin, or 2 million Bitcoin, not $2 million, but 2 million Bitcoin in June of 2031. And that's just, again, using the math and the reflexivity of keeping amplification on at 30% as the price of the Bitcoin goes higher and pushes the balance sheet even higher. So you're adding from issuing credit, which pushes the balance sheet higher. You're adding, and then I've also included a common stock ATM capital raising metric in here as well. So I could throw that in here. Advanced analytics. So I assumed an average. Oh yeah, I backed into an estimated stock price. So we could think about moon math here. I backed into an average MNAV of capital raised, and I put it at a modest 1.6. And we can crank this number higher, and we can have some fun with it and see what it looks like. But I was backing into some numbers here of like June 2031, an MSTR share price of $2,100 and a NAV per share of $1,300, assuming a 1.6 MNAV, assuming that the capital that they raised throughout the time horizon was at a 1.6 MNAV in composite. I would argue there's probably a reason to push that number a bit higher, given that historically it's gone up to 2, 3, 4, and almost a 5. So there's a few different variables here that make it really interesting. So so I had a lot of fun with this. And then, Dan, you bring up power law a lot. So I plugged in a power law model in here as well. And like, it actually doesn't change the numbers drastically. If you look at, just going from the base case to over the power law, hitting $1 trillion BTC notional balance sheet would occur in December of 2032 instead of June of 2031.
Yeah, exactly. Power law is like right now, like 30K over the next 10 years.
Yeah, and it assumes a decay as well. So there's kind of
Exactly.
there's a decay component in there as well. So it's like I've kind of taken the power law model and I've just kind of bumped it up a little bit, and I've taken the power law model and bumped it down a little bit on the bear and the bull case scenario. So you've kind of got a little bit of a window there.
And that's what Saylor's model is too. It's exactly that. It's just a decaying, like all power law is a decaying exponential over time.
Yeah,
and he just has a terminal exponential, which like I think yours as well. And that's something we should talk about later on a different episode. But
so just for funsies, moon math. I'm going to click into moon math. I'm aware this is not financial advice, so I got to click this button as well. And then I've also got to click in advanced analytics and go to an average MNAV of 3. And what would the price of strategy be by 2036? None of this is financial advice, but in taking this moon math scenario, a $313,863 share price. And that's assuming common stock dilution. That's assuming capital raise. That's assuming the perpetual preferred amplification stays at 30. Obviously, we're talking about a 10-year horizon. A ton can happen, but anything with a remote probability with this type of excitement on the horizon is worth having exposure to. A couple things in looking at the moon math, which was hard for me to kind of wrap my heads around, but you can see a number here, final Bitcoin hodl in 2036. It's got 26.9 million Bitcoin. And you say, Jeff, that's more than the Bitcoin, all of the Bitcoin. Like that's more than all of the Bitcoin. Yeah, I get that. It's more than all the Bitcoin. However, once this balance sheet is so big, they're going to start eating everything else of value. There's going to be more than 21 million of Bitcoin of value in the entire world, right? If Bitcoin's your unit of count, you got to go look at, all right, there's 21 million of Bitcoin, but you got to think about the rest of the world priced in Bitcoin. Like how many Bitcoin worth of value is out in the world? Like, I don't know. 150 million, I don't know, 200 million. Like we can speculate on what that number would be, but like they would effectively have the ability to go eat up the rest of the balance sheets of the rest of the world in different places, whether that's, who knows what that means, whether that's insurance or buying, all of these different equities or real estates or, whatever that may be. But yeah, I think it's going higher.
$1 trillion on the balance sheet is more than the entire market cap of JP Morgan or Walmart. So it's a good amount of capital.
It's a good amount of capital. $1 trillion balance sheet is a good amount of capital. And
by the way, that you're going to have a fudster be like, well, Bitcoin can go to zero tomorrow and it'll be worth nothing. You just know somebody's going to say that at trillion, just because it did this if they started in 2020 and this is in 2030, they've been doing it for 11 years. It could just go to zero tomorrow. Everybody knows that. I mean, we just know we're going to hear that in 5 years from now.
So I just say the dollar has a head start.
Right.
It's moving faster, right?
By the way, I did an analysis and I said I put all the numbers for the US government, $2 trillion yearly shortfall on the budget, $38 trillion in debt. I said, if this was to be evaluated as a company, and I didn't say what it was, it would be like, this company's completely insolvent. And then ChatGPT just said, you're talking about the US government, though. It can print money. I go, sure. Would it be investable, though, as a company? And the answer to that is no. If you guys don't believe me, it would be kind of funny if you just plug in, if you could keep the exact same site and plug in the US dollar into this, and it'll look horrible.
Yeah,
It would. You keep everything the same, but just start off with, how much the dollar is being debased per year. Just change all the metrics, leave everything the same, just change all the names on it, same format, and have it, because as Bitcoin goes up, right, it's not really going up. It's the amount of dollars it takes to buy each Bitcoin, which is what you've calculated here. And so, but if you plug the government into this instead, it wouldn't look so good.
yeah. I mean, so this, all this stuff is so dynamic, and I think it seems so asymmetric. It seems like there's an information disparity, like people that are using AI and understanding what's going on in financial markets and seeing these trends that are like very clearly changing over time, right? Like, what fixed income product is trading $500 million of volume in 3 days? Like the whole world, as to use your word, Ben, is like completely being rewired, and we're literally doing it. Right? Like, we are doing it. Everybody that's working in the space is doing it. Dan, you're doing it. Ben, you're doing it. Adrian, like, we're all doing it. That's all part of what we're doing here, is rewiring everybody's brains to like see what's happening. Really fascinating stuff. Anyway, good time to plug what's happening down in Vegas. So in Vegas, there will be Bitcoin for Corporations 2026. This is February 24th through 25th. We have a True North event on Monday, February 23rd at Strategy World. I have seen the draft schedule for Bitcoin for Corporations 2026, and I think this is like, you're not going to want to miss this event. I think it is going to be pretty epic, especially seeing everything that's happening now, going on with the securitization, what's going on with Stretch, what's going on with the preferreds, what's going on with like everything globally. I think it will be an event that you will kick yourself for missing. We are going to have a event on Monday, February 23rd. If you're interested in attending, there are 70 tickets left. So we've sold 53% of the tickets. There are 70 tickets left. It's a chance to chat with everybody in the True North team. We will have some special guests kind of swinging by. We will have giveaways. We're going to have a great event in the evening, like drinks and food and networking, and everybody can chat. And we want it to be a very special in-person event. We're not going to live stream it. We want it to be, hands-on and interacting with people within the community. So I think it's going to be a great event. We're really looking forward to it. If you're interested, you can check out our website. It's got True North tickets here as well. And yeah, the site is on Luma. You can check it out here, and yeah, get your tickets. I think they're going fast. Actually, I'm supposed to say we do want to give away one ticket to True North World. We're going to give away one ticket tonight. Anybody that's retweeted our stream, we will be giving away one ticket, and we'll pick at random, and hopefully we'll do that at the end of the show tonight. So if you're watching, please retweet it and pass it around, and we'll go from there. Even if you bought a ticket, we'll figure it out. Cool.
Yeah, last year was amazing, so I'm looking forward to this next one.
Oh, we're going to crank up the volume a little bit. It's going to be good. We've got some resources. I think it'll be a really good time.
We're not going to throw it together in a week like last time.
Yeah, exactly. Yeah, we've had some more time to plan this. We've got some power behind us with Strive and the team working here at True North. There's just a significant group of people working behind the scenes to make this a great event.
Hey, Jeff, while you were talking, I just just hit Perplexity real fast, to talk about what strategy has done versus stretch. So sorry, to give a comparison. TLT, which is long-term treasuries, has a 46 to 47 billion dollar market cap. You guys want to guess what the trading volume is per day?
TLT, $46 billion market cap, long-term treasuries, trading
Yeah.
volume.
What's the
I don't know.
30-day trailing? What's the average daily volume?
It's probably 200 million or something like that. 300 million. I don't know.
It's like $30 million in a day. It's 34 million
30
shares per
million.
day. So it's the dollar amount. We'll multiply this out. It's like a really low number given it's $46 billion in terms of liquidity. So if we do that quick comparison, as a percentage of the market cap it's a really low number. And that's the part where bonds, that's the whole part you're trying. It's off by a factor of 10x versus MSTR.
That's why these preferred equities are novel, right? Because they're actually
Right.
equities. They trade in value. There's no repayment period. They fluctuate based on the credit quality, but also speculative behaviors. You've got the first preferred with an ATM on it. That completely changes the price dynamics. So there's a lot going on, and they are unlike other instruments in the market. Like bonds are quite boring, especially private placement bonds.
Yeah. So
Bonds are boring. I mean, that's a crazy statistics. And Dan, you bring up a really good point. Like a lot of people just really throw this piece to the side, but the fact that there's an ATM on these instruments is just so fascinating because you can get that capital in the door at any point in time that you want it with effectively like a click of a button or a quick message.
And I was talking to Mason about this the other night. I was like, we were reflecting on Stretch, and it's like it's so novel because you couldn't have created that product without an ATM on the preferred. If there were no ATMs on Stretch, the price would just blow out right now, right? And then they could adjust the interest rate; it would come down. But there's only one mechanism, and the interest rate is such a kind of large adjustment mechanism on a coarse adjustment mechanism on a monthly basis. They need the ATM to cap that price. So if it wasn't for the ATM, they could never create a stable perpetual preferred product like Stretch. So like everything, it really was lightning in a bottle. Like all these different mechanisms that they were able to pull together into one product. Like you can't do this with a bond. I mean, the bond can be illiquid, so there's less mark-to-market ability, and so therefore it could be a little more stable. But you don't get that sort of liquidity in the bond that's necessary to issue large amounts of it. So in terms of a public security, this is the way it had to be.
Soleil, what's up, dog? How are you?
Great. I love chopping it up in the comments. I get to just fanboy.
You get to
No
hang out for a while.
responsibilities.
Yeah, Adrian had to pop off. We're an hour in, and we're cranking through here. I mean, what's your thoughts? What are you thinking about, Soleil? What's the big takeaway from you right away?
Oh, right away.
Yeah,
I
what are
don't know.
you
We're going to
thinking
talk about Jerome Powell's hostage video. You know, he's like over there blinking in Morse code, trying to like help me.
Yeah, we could start there. We could go there. We could go what Bitcoin did interview. We'll talk about the Fed. Yeah, that's good.
Yeah, I was worried you guys were
Start
going to talk about what Bitcoin did too much, and I was going to miss out on it.
Let's jump in. Let's talk about it. And okay, so what happened? What Bitcoin did? Danny Knowles. I like Danny a lot. He's a good guy. We've had some great conversations, and I've enjoyed trying to teach him about like what we're doing in this space and what's going on. And he's picked up this podcast from Peter McCormack, and he's just really kind of run with it. It's had a very like strong Bitcoin OG ethos. It's a lot of it's focused on folks that have been in the space for quite a long time, and they're building like in the developer community. Like, what are you building on top of Bitcoin? Whether that be like medium of exchange apps or like custody solutions, and a lot of the bigger conversations have happened with some of those folks, and it's been really fascinating to see this evolution because like finance showed up quick, and they got a lot of Bitcoin very fast, and a lot of people didn't like it. And it was very confusing because capital markets are inherently in the past have been incredibly opaque, and people are confused. These are different structures. Well, it's equity, it's not Bitcoin. People hate that. It's like not your keys, not your coins. Blow up in the past with these other exchanges and things, and now it's hard to differentiate between, for some people, between like what's happening here and like opportunity cost and thinking about portfolio development and efficient frontier and all of these different things. And I think that really just came through. Like you could see that in the entire podcast. It was very clear that Michael studied his host. Like, okay,
Mm.
hey, I'm going to welcome you to my house, and we're going to do a podcast together. And I'm sure he went back in and looked at every single podcast where Danny had talked about MSTR and got to the point of what are these guys missing? Like they literally, what Bitcoin did literally had an episode like, is MSTR a Ponzi? I've talked with Danny twice in the last 6 months and almost exclusively talked about MSTR and like all the perpetual preferred securities, how they're working, why they're working, who they work for, how the capital markets are interacting here. And I'm not surprised that his response was exactly the way it was, because what's happening over there is like that. It's just a little tired. Like this argument is a little tired of what these Bitcoin treasury companies can do, because Bitcoin is capital, and having a vehicle where you can hold this capital and do things with it, that's the point. Like we're doing like a human is effectively a business, right? Like my family, I see my family as a business. I buy Bitcoin for my family and I do things with it. I buy Bitcoin exposure for my family and I do things with it. And a business is no different, right? You've got like a group of people, but that group of people has access to different types of capital markets. They've got debt structures that they can access. There's things that you could do. You could utilize that capital in different ways to build XYZ. Now, what are those things? They're literally being built right now. Whether or not you want to participate in the things that those companies are building, that's your prerogative. Like that's completely up to you. You could take that risk decision if you want, but like you're not going to stop any of these companies from putting Bitcoin on your balance sheet, because it's good for them. If it's good for you, it's good for the company. And whether or not like the price is volatile and people get wrecked because the price moves up and down and they don't have the long-term view, like we've talked about like this entire podcast, that's what it was. And I'd be curious to get your guys' take.
I
Yeah.
think that. Oh,
Go ahead,
Dan.
Sola. No,
Okay.
you first.
Yeah, I think he actually could have even went farther, because he took a little bit of offense because he said, well, what about these bad companies and companies that don't have positive cash flow? And I think Saylor, he kind of caught himself a little bit, because he was like, well, don't invest in bad companies. Like, what are we talking about? At least the ones that own Bitcoin, everyone else is still on zero, right? But I think he could have even taken that one step farther and said, well, are negative cash flow companies even bad? Or are they just victims of monetary debasement like the rest of us? Like, you could have a good business, but if you can't keep up with the manipulated inflation, you're going to be cash flow negative. But if you're on a Bitcoin standard, you might be cash flow positive when you're actually stacking real cash. That's not a melting ice cube. So I think, yeah, I mean, was he a little harsh on the guy? But I think he could have even taken it one step further and said, like, these companies that you're calling bad may not even just be bad. They're out there busting their ass, and they might be cash flow positive on a Bitcoin standard.
Well, that was exactly it. Well, if your Bitcoin is CAGRing, if you have $100 million of Bitcoin and is making $30 million a year at 30% interest, and you burn 10 million, you still just made $20 million a year.
Yeah.
Okay. Like, are you going to be mad at those companies? Like, do you support them? Like, you don't have to buy the equity. Nobody, like, does it help if you get out in the market and talk about your equity? Yes. Go look at every financial podcast on the fucking planet. Like, everybody's like talking about everything. Like, do you want interest in the stuff that you're working on? Yes. Like, these are like, what is finance? Finance is all about storytelling. Like what and to me, capital flows to the best story. Like, what is the best story? And you've seen that in the market right now. A lot of capital flowing to AI. Like, AI is a great story. Like, it's going to eviscerate people's jobs. These companies that are running AI, like, they're going to make a ton of money. And I think what's happening here in Bitcoin, is a really fascinating story. I'd argue even more interesting than a lot of the AI stories that are happening at the moment because of, hardware multiples, PE, all of that stuff. But and that's what I'm here talking about it.
Right on.
There's a flaw in human nature, I'll say, where people want things to stay the way they understand them. And I think that's the difference we're seeing between the OG Bitcoiners and guys like us. And they want it to be the original movement where it's just individuals that are buying Bitcoin. They're moving it into cold storage. They're creating these micro economies amongst themselves, and they're transacting amongst themselves in Bitcoin for goods and services, and they're fully cutting out the financial system. Okay, great. That's one view. The problem is if you really want Bitcoin to succeed, like really succeed, what you have to do is build ways for it to take over the scaffolding that holds up the entire financial world. And to me, that's what's happening now. That's what these treasury companies are all about. That's what digital credit is all about. We are embedding Bitcoin at the foundation of the capital markets and scaling it and eating it alive. And if you want to see Bitcoin succeed, if you want to see what makes it interesting to other people, it's going to be success, right? That number go up is going to attract more and more of the builders that will build that functionality that they talk about that they deem as valuable. But I see it entirely differently. I want Bitcoin to be so systemically important that you can't ignore it. And the only way to do that is to intertwine it in the fabric of the financial markets, right? Make it undeniable. Get rid of every attack vector because the cost is too high to attack it. And that success is going to breed all these builders coming and pushing Bitcoin forward in the way most people want to see it. You want to be able to transact with Bitcoin one day and buy your goods and services in the grocery store with Bitcoin or whatever, like get it so powerful banks can't stop it and create the
or
new
politicians
banks.
or politicians.
Yeah, you're building the industries right now. Like this is, you've said it before with the digital credit side, Jeff, like this is year zero. I view that for a lot of things, right? If you don't like the way that banks have you transact money, well, someone needs to go out there and build a better bank. And you need to build that with Bitcoin if that's what you believe in, right? You can start rebuilding today what's going to be the powerhouses of tomorrow that are driven and enabled by Bitcoin, right? Sound capital. And so spending time as Bitcoiners attacking whether Satoshi wanted just individuals to have it or wanted corporations involved or wanted countries involved, everything's built by people. So if people are starting to believe in Bitcoin, they're going to start building it into everything that they do. And that's what you're starting to see. You can't take a gift like Bitcoin, create it, release the code out to the world, let everyone mine it and run nodes, and then decide how it's going to be used. That's not real. Bitcoin's a gift to the world, and the world now gets to decide how it's going to be used. And we've all got different ideas for what that looks like. So, when we get into these arguments, like I'm not going to be apologizing for what we're doing because I think what we're doing is incredibly important to the next phase of Bitcoin's success. And I don't want those OGs to stop building what they believe in.
Yeah.
Right.
We need them too. We need them too.
Functionality. This isn't going to happen by one small group. This is an open source project for the world to push forward together. And as individuals, if you're concerned with the way things are going, start building the next chapter. If you don't start building it today, you're going to get run over by what's happening now. And you can't complain about that.
Yeah, Ben, look, I get what you're saying, but what Saylor did was an open source project, and they don't realize that. It completely was. Not only, and if you're like, well, what do you mean grain of salt is open? In 2021 or 2022, Saylor published a playbook, how to put Bitcoin on your balance sheet and convince your board members how to do it. He ran that. You could Google this and go find it. He did 3 PDFs. They were 50 pages each and explained he open sourced the manual of what they did. And so the OG Bitcoiners are like, oh, well, I don't like the fact this is comical. Another symmetry test is I don't like the fact that Saylor is equitizing Bitcoin. They're putting Bitcoin in an equity wrapper. And I'm like, yeah, bro. Then why do you like the fact that we can tokenize a real world asset, an RWA? Like, oh, would you just say? I'm like, you want me to go slower for you? You think it's a great idea to tokenize everything, but when then Saylor equitizes, notice how I shift words? You're like, oh, we don't like that. And I'm like, really? Really, bro? Maybe you don't talk to anybody that doesn't have an incentive to be nice to you. Or you haven't gotten anybody that had enough balls to challenge you. And that's what happened exactly with Danny. He showed up for a he showed up for a knife fight with a guy that had a gun. And what that means is, I'm dating myself. The guy watched the videos. That's Saylor.
Yeah.
Danny was
100
completely unprepared. He did not do his homework. He shows up against a $20 billion guy that's a legitimate rocket scientist. I mean, let's just think about this. That graduated from MIT and wrote a master's thesis on the geopolitical structures of the world. That's Saylor. Saylor's read all these books. Danny shows up. Oh, well, don't you think all these Bitcoin treasury, some of them are scams? I'm like, bro.
There's a
what
reason
did
he's
you
a
do?
billionaire. There's a reason he's a billionaire because
Mo,
he's sharp as shit.
You just poked a gorilla, dude.
And I'm
what
not
do
going to
you
pretend
think?
if we all showed up that he wouldn't drive over us and back over us
Oh,
for fun,
yeah.
right? Like this guy's on
By
a
the
different
way,
plane.
I've
But
had-
he's accelerating all of our journeys by sharing what he's learned through all of that. We're getting the Cliff Notes version of decades of learning that he's had.
sure.
And that's
And by the way,
huge.
it-
And the
it's huge. And
class in
I want
corporate finance we're all getting right now is equally as huge.
it's equally as huge. The craziest part of the whole video is after Danny's watching this, dude. I will say this. I will date myself. You had poise and temerity to sit through the beating. Congratulations to you. Many people would have just walked out. That is great that you have done that. And from that perspective, I respect you. Now, the fact that you showed up unprepared is a different issue. Okay, so that's one part of it. But something that came out in that video was crazy that I had never heard before. Saylor said that Strategy is a $40 billion company. They could not get insurance, and he had to personally underwrite it
yeah.
himself for years.
D&O.
I never heard that. You guys ever hear that before?
Yeah, I heard that story. Yeah, D&O.
Yeah, I heard it as well
Publicly?
privately.
Yeah,
Oh, you heard
privately.
it prior. I had
Yeah.
never heard that
Yeah.
publicly. So I never heard that. So when I heard that, it's like somebody's like, oh, see, Saylor, he didn't do it. I'm sure that's whatever. It's like an iceberg. We're seeing the top of the iceberg with Saylor, and Saylor knows there's 100 things that we don't know. I'm just going to be clear with you guys. It doesn't matter how smart we are. Saylor knows 100x more than we know, and my number might be low. And when I heard that, I was like, wow. And you're poking that guy? Look, I
mean-
show a little bit more. I'm a little bit
Ton-
more careful.
ton of respect for ensuring your directors and officers. Like I will personally
Yeah, that was wild.
I will personally insure you. Not only did he give the investors an out, like I'll give you an out. I'll buy your stock. If you don't agree with his Bitcoin strategy, I'm going to buy your stock. This is back in 2020. And so he went through that. And then the insurance industry dropped him. Like, we don't want you buying Bitcoin. They dropped him. And I think he was insuring like 40 to $70 million of D&O coverage. Like, if we have a loss, like, I got you. Which, like, they could come after your personal assets. Like, if something happened, they could come after your personal assets. And, you know, that's a very tricky place to be when you have a $500 million balance sheet. Now, today, like, that equation is a bit different. And, like, they could easily assume that insurance limit now. Maybe they buy it because it's cheap. I don't know. Maybe the market likes them now. I have no idea.
Well, Jeff, I think you should stop talking about insurance because you don't know anything about insurance. Okay. Move on.
It's I mean, that world
I
is
think
just
when you're in Sailor's seat, you've got a ton of pressure to continue providing people the air cover to think differently than everyone else does. And I think that's what you saw him reacting to, right? He was seeing this idea, which fundamentally, if you're a believer in Bitcoin, should seem like a good idea, right? Bitcoin on the balance sheet is better than not Bitcoin on the balance sheet, right? Just if that's as simple as it ever is, That's the idea, is Bitcoin is transformative capital for companies to hold, for individuals to hold. And so I think when you're in his chair and you've got all the arrows in the back that he has, right? People have been coming after him for years, saying all kinds of things. I think you do hit a point where you need to show how deeply you believe in all of this. And I think that's what he was doing, right? He challenged the idea head on. And a lot of people will say things like, oh, well, these treasury companies, they don't do anything. And all I saw him really doing, and it was in an uncomfortable manner, right? I was not envious of Danny's seat over there because he was the guy in the room that asked the question. But he pushed back on that idea and made you think critically about it. You're going, yeah, it is a little strange. If I am a believer in Bitcoin and I do believe this asset's going to succeed over time, and here I am throwing mud at all these companies that are putting tons of capital on their balance sheet that I think is going to be worth an absolute ton here over the next 5 or 10 years, that seems a little silly, right? And you're seeing him push. And then he's also pushing on the notion of, what is a pure play treasury company? And we've even used the term a lot. I've used it a lot. And it really doesn't follow through. Like if you look at what all these companies do, they all have some type of core business under them, right? Like we're an asset manager. We've got ETF products out there in the market. Like we have an operating business. Strategy has a $500 million software business that's out there. Smarter Web has a web development business out there. Kindly MD had their business. Like there's all these businesses underneath all of this. Now, you can argue whether those businesses are material when you look at a Bitcoin strategy, but pure play, the way people use it, doesn't mean no operating company, right? These are operating companies. But the Bitcoin side of the house starts to dwarf the operating company if you're even remotely successful with it on any time frame. And so I think you were
That's the biggest
seeing
point. That's the biggest point.
Yeah, but you see, guys,
an
I-
idea and protecting the notion around, or challenging the notion around Bitcoin, right? Are you really willing to criticize Bitcoin as an improvement in how every one of these companies is operating, right? Is integrating that into your balance sheet a bad idea or not? And if Danny could have defended that he thought it was a bad idea, you'd get a different conversation. But in that room, there was not going to be any way where you could say having Bitcoin on your balance sheet is worse than having dollars on your balance sheet over the long term.
Right, but Ben, there was two things that happened. What you just said was exactly correct. You're saying Danny said, "I believe this, and let me back it up. Why?" Now, Saylor, tell me this. What went viral for 2 days after this was Saylor's demeanor and that he attacked him, right? And so I am discussing the meta message, and you're discussing the message. So you're saying the message is structurally, Saylor's refuting what he is saying. What happened with Saylor is like, oh, he was grumpy. Oh, he got agitated. Oh, he got irritated. It's think about it. And people, and I think the reason why people were so mad is because they were like, oh, Saylor should answer the question. He did.
He did. He
And
totally
he
did.
And he did not hold back, and he applied the symmetry test. You're getting mad at 200 companies or 200 companies that have Bitcoin in the balance sheet. Why don't you make the same argument about 400 million companies that only have fiat or don't have any Bitcoin? And that froze Danny right there. That is a classic symmetry test. And Danny never came across anybody that could do that to him. And that's people are like, oh, well, he attacked him. And what happened is the reason why people get upset is that, and I talked about this on Spaces with 500 people on it. If you attach your identity to your position, that is subjective. If you have a position, you have a belief, Bitcoin treasuries are this, and you could argue about it and you don't get upset, that's objective. Subjective, your identity is tied to it. The reason why people get triggered is, oh, he's being mean to Danny. He would be mean to me because I believe in that question. They're attaching their identity to that. And with this is when you think objectively, which is the way we talk here is, well, objectively, you just said, Ben, if you think about this, for these reasons, this holds true. That's an objective conversation. But what happened with Danny and why it went viral was because the meta message, the way that it was delivered, and people are like, oh, I don't like Saylor's tone. Now, the other point here, and I'll wrap up on this, is that if Saylor is on mainstream media, CNBC, MSNBC, whatever, Fox News, or so forth, he has to operate a certain level, okay, because he's on mainstream media. When he's on a podcast, he will function as executive chairman and as ex CEO of strategy, right? But the way that he can go full bore against a podcaster is different than the way that he would talk to a newscaster or a host on mainstream media. And Danny missed that. He watches him on TV. Oh, this guy is going to be so called civil. But in a podcasting format, that level of decorum is different. And if people don't understand what I'm saying, that's cool. But it will sink in that there's a difference between a podcast and being on television. And
Yeah.
Danny just did not get any of that.
It's kind of
Danny-
like if you're getting, so say you're out with your family and you're scolding someone, there's a difference between how you do it out in public versus how you would do it behind closed doors. And because this is a
Absolutely.
Bitcoin podcast, this is he's talking to Bitcoiners. And I'd say he did
Yeah.
two distinct things. He answered the question and he sent a message.
He sent a
And those are
message.
not the
That's what
same
it
thing.
was.
He
Yeah.
did.
And I think that Danny was legitimately confused. Like he's like, no, I'm not trying to, be insulting or whatever, but we didn't really understand is that when you say, well, I'm not criticizing the strategy, but I'm going to ask this loaded question, why would anybody buy these companies? You're kind of criticizing the strategy, the way that you phrased the question. So he shouldn't have really been that confused, but he kept trying to backtrack off of it. And it's like, oh, I'm not criticizing the strategy, but
I like what you've done with the prefs.
Yeah.
Like, what about the other companies? It's like,
Yeah,
well,
but-
they're doing stuff.
exactly.
Also, and also just like, I don't see why when we talk about like the evolution of capital markets and Bitcoin on the balance sheet, everyone has to focus on knocking down 99%. Like that's what they mean when they say like all the other
Oh, I
companies.
know.
They mean every other stock down 99%. I'm like, are we serious here? Like, why do we have to? Why does anything good have to be watered down by like the few scenarios in which the strategy? It was a like. Would you say this about the .com bubble in 2001? Right? Would you say so? This internet thing, sure, but like look at X, Y, and Z company. And like that's pretty much where we're at in the whole thing. And like investors get burned. And that's the other thing I don't think Bitcoiners get is like, and Saylor was really keen on this in the interview. Like equity investing is a lot different than Bitcoin. He's like, I've been telling you for the past 5 years to invest in Bitcoin because it's risk free. There's no counterparty risk. And you decide to go out and invest in equities without cash flow or for whatever you decide to invest in. You decide to invest in equities and you take on management risk, and no executive controls the price of their stock furthermore. So like, that's the risk. Those are the risks you take on. Like you can't just blame the universe for.
Well, there's no
equity price.
discussion of nuance in any of that, right? There is a
Yeah,
lot of
nuance. There's so
complexity
much.
in equity investing, right? So for instance, when you look at when all these companies were emerging and you were seeing all these high prices, half the time the companies hadn't even merged yet. So what was happening was people were rushing in and buying the equities of the target company, the company that was public, which had incredibly low float. And it takes very little capital to spike those things, right? Like that's what was happening. That's why you were seeing such visceral movements in a lot of these equities out there. And it's all a part of that equities learning curve, right? Like there was a ton of things that we all learned in this past year, a ton. And now you go through another cycle, you would look at the market entirely differently as these companies are coming out. You know what to look for, you know what terms to look for, you understand the different types of financings that they can use and the nuance with how those play out in the markets, right? Like there was a ton that happened. There was an absolute crash course in investing. But when you get into social media, there's no room in short numbers of characters for nuance. And so it's, scam, pump and dump, whatever people want to say. Like it gets distilled down to emotions, right? Not intellect, it's emotions. And that's, you can't really communicate in that style and get to any type of outcome. And I think it's why you need long form conversations and you need to reflect on investments that were made. I've had winners, I've had I've had all kinds of stuff, right? And you do learn way more when you go through a cycle like we just did. It's not fun. Of course not. But you learn what to look for the next time around. And so now with things like reverse mergers, you understand that during that period of time before the companies even merge and become the company you think you're investing in, right? There's probably very few shares out there. You learn that with pipes. There's timing periods where those investors finally get control of their shares and they're able to sell them, right? You need to pay attention to those. Like there's all kinds of things that you learn because equities are incredibly complex and there's a million ways to do the financings of them, which is why, to Sailor's point, Bitcoin is the easy investment. If you don't want to have to go that deep and have to understand all of these different nuances with equities, yeah, Bitcoin's the choice, right? That's going to behave the same way all the time.
Yeah, and to your earlier point where you were talking about, saying cash flow, pure cash play is like a derogatory term. Like I use it, but I don't mean it in a negative way. But how many people, how many real estate stories do you have or do you see where people are like, I sold all my properties and bought Bitcoin? They're exiting cash flow positive positions, right? Just to buy Bitcoin. They'd rather just own Bitcoin than have cash flow positive because it can't compare with Bitcoin's returns. So it's a weird thing to call pure plays as an insult when there's people out there just exiting cash flow positive businesses to stack sats.
Yeah, I think when people say pure play, they just mean it's the primary focus, right?
Sure.
Like when you look at a lot of these companies, that's what they're messaging.
Like, why would
That
it not
seems
be your
to be
primary
their-
focus? It's
their
like
vision
it's
for the
making the most
future.
money everywhere. Like,
Right.
what's making the most money? Like doing what strategy's done. Like, why would you not do that?
Yeah, but I'm going to give a distinction here, and I said this on Spaces earlier. So, and I can make this real simple. So, almost all companies except for Bitcoin treasury companies are income statement driven companies. By and large, 99% of what they do is income statement driven. They have too much income. They can either buy back shares or use dividends or build up their cash balance, and then they can buy other companies. Bitcoin treasury companies are balance sheet based companies. And due to the FASB fair value accounting that Saylor pitched and went into effect in January of 2025, they can show positive EPS, which does not trigger CAMT, corporate alternative minimum tax. And that was a big win. Now people will be like, wow, you did that really fast, Grain. Can you simplify that? Yeah, let's assume that somebody's 80 years old, they're retired, they bought a house 40 years ago, right? So and they make this statement: I'm house rich and cash poor. The house rich is they're sitting on an unrealized gain because they've been in for 50 years. The house has been paid off for 20 years. That's their balance sheet. Oh, I'm cash poor.
Mhm.
What does that mean? I am now surviving on Social Security and whatever meager pension I have or investments, and I have to continue paying property taxes. And of course, somebody goes, well, we should just eliminate all property taxes. No, that's the distinction between the balance sheet, the house, and the income statement, which is how much money they have coming in. Why do we like strategy? Not only are they probably going to have the biggest balance sheet, as Jeff just said, but they give us a choice. You want to buy MSTR, you get no dividends and you get no yield at all except for it going up. If you want to realize a gain and take something out, you must trim a piece of it and sell it and pay taxes. Or you could take some of your money and you could buy the prefs, and there you'll get a yield. So Soleil, I don't think anybody is really selling houses cash flowing in order to buy Bitcoin. I think that there are people that are selling houses to buy a pref like Stretch because it's paid monthly. I get 11%, and a typical cap rate on real estate is maybe 5 to 8%. And for them, they're like, oh, I can get this cash flow from a pref without having to fix the backed up toilet.
Yeah.
That I think does happen. But buying native Bitcoin, unlikely, because it does not pay what they used to get. And so I'm not saying buy all prefs or buy all MSTR or buy all Bitcoin. Maybe can't we all just get along and buy a little bit of each?
Well, your example there, Grain, is spot on for all of this. And that's why people are going to understand these companies ultimately, because it's how you structure your own personal financial life, right? There's the saying, nobody gets rich on a salary. You have to own something. So people understand compounding. That's what you're doing with retirement accounts and those types of things, is you're buying assets that compound over time. And the earlier you start, the longer that compounding period is, the more impactful it is, the more wealth you end up with on the back end. It's the same thing that's happening with these companies. We flipped it. All these other companies are going out of business slowly, focusing on their income statements. And now you've got a whole cohort of businesses that are focusing on the compounding of the balance sheet side. And so people do understand the concept. They just don't know it yet. They're still getting there. It's confusing because businesses have always just been measured by top line, bottom line margins, right? That's what you're focusing on. So they have to shift it going, well, that's not how you run your life, right? If you're planning to retire one day, you know what you're doing. You're buying assets somewhere. You better be, right? Because
But
otherwise
you know what,
retirement's
Ben?
going to be tough.
But you know what? I'll tell all you guys, and Dan was with me many places. We traveled around the world last year. I talked to a lot of people that are CFOs that aren't running Bitcoin treasury companies or analysts or so forth. And I had a lot of these conversations, and I'm like, well, what's your opinion on FASB fair value accounting and what it's going to do with strategy? And you know what I got? What? I'm like, and I'm like, cool. I think the beverage counter is over there. Let's go. I'm gonna go grab a diet. The fact that I could say it to somebody that has an accounting degree, and this is the biggest advance I think in FASB and accounting in probably 10 or 20 years. I say that with no hyperbole at all. And they looked at me like, what? I'm like, you just told me you're an accountant. You just told me you're a CFO. You just told me you're a controller in a company. You just told me you're a CEO. I'm not talking to Joe Retail, but you don't know how many times in different places around the world, Orlando, Las Vegas, Prague, New York City, multiple times. I would say this to hear, I want to hear what their opinion about this was. And what I got was, what? That
Well,
was a
and
very and Dan was with me. And I'm not going to name any of these people or call them out. They're probably not listening to an hour and 46 minutes as we talk about this. But I'm just going to tell you guys, that was my takeaway for last year.
it tells you how few people are willing to allow themselves to think differently, right? These guys are slowly dying because they're fighting this uphill battle against innovation constantly, while they're not reserving a war chest that's going to keep their companies alive if something shows up that competes with them, right? They're not even willing to make that change because if they suggest it and they're not plowing all of that cash flow that's coming in back into R&D and more efficient facilities and more salespeople, if they're not getting it out the door and showing growth, they feel like they're failing. But
Yeah,
you're one disruption away from being out of business if you have no fallback, if you have no balance sheet capital to rely on, if you have to reinvent yourself.
Yeah. So Ben, I totally get what you're saying. This comment came up and this guy wrote, hey, I know somebody that during COVID sold all of his properties and bought Bitcoin. Okay. No matter what I say, there's always somebody, hey, I typically don't see 80-year-old people running out and buying a Tesla. Oh yeah, my grandpa's got a Tesla. And I don't see the same thing with people buying Bitcoins being 80. Oh yeah, my grandpa bought Bitcoin. Like, okay, you taught me about the exceptions. And let me tell you this. In 2018, I bought a house because I went all in 2017 in Bitcoin. It's sub $2,000, Grayscale Bitcoin Trust. That real estate agent that helped me buy the house, I'm still friends with him to this day. And I said, in the intervening 8 years, how many people have purchased a house in Silicon Valley with typically the most technologically, focused people, right? In Silicon Valley, from San Jose up to San Francisco. How many people use profits from either Bitcoin or crypto in the intervening 8 years? And his response to me was zero, absolutely zero. I said to him, oh, okay. How many times has the word Bitcoin or crypto ever come up in a conversation at all in your whole life? And this guy sells 100 houses a year. He has a whole thing. This guy's a top performer in real estate. And he's like, never once. The only time I've ever heard of Bitcoin or crypto with you is with you. Never once has it come up. This is 8 years later, typically with the most advanced people and young people, and none of them are using any of those gains to buy or even mentioning it that they do it. And then I said to him, like, well, how do they buy all these houses? I'm like, what percentage of the people that buy houses are at NVIDIA or AWS specifically, even though they're at Amazon? He's like, oh, that's 70% of my business. So these are all tech people, but they're not interested in Bitcoin, or they don't
Yeah.
even bring it up.
The world's going to move so fast around them. I mean, like if you're not paying attention to it, like this stuff is going to get huge really quick, and it's going to dwarf everything very fast, very fast. I want to go back to the podcast for just a moment because I've got a like fun sailor story, and just thinking like watching this podcast with Danny brought back memories. So like a lot of people said Sailor was very rude. And he was like out of line, which I thought was an interesting like comment for like the people on X to make. But I also realized like, oh, a lot of these people probably haven't met him in person. Probably haven't met what it's like to meet a billionaire. Like you don't waste a billionaire's time. Like you come in and like if you got a 30-minute meeting, like I've had a one-on-one meeting with him last year at Strategy World. 30-minute meeting, walked in, he's like, okay, how do you want to spend the time? Luckily, I came prepared. I had a few things I wanted to talk about. I'm like, need your opinion on this. Like, I'm curious about this. And, I came to him with an idea of like starting a credit rating agency for Bitcoin companies. And he's like, well, you could do that, but if you do that, go raise $50 million, buy $40 million of Bitcoin, and when the credit rating agency fails, at least you'll have $40 million of Bitcoin. It was like, okay, what's next? And I was like, holy shit, like, like I thought it was gonna be like, at least 10 to 15 minutes part of this conversation, and I'm like, okay, it's just like obliterated like the face like in 10 seconds, and I'm like, okay, next topic.
and by the way, you think what the guy's doing is great,
yeah,
right?
but,
You were trying to be helpful, and he, right? By the
looking
way,
back,
are you mad at him because he said this to you?
Looking back, I walked out the door. I'm like, damn, wow, like did that go bad? Like we talked about a few other things. I'm like, did that go bad? Like, what happened there? But honestly, I was so appreciative of his honesty. Because like look at where I'm at now. I joined a company and I'm like running a Bitcoin treasury strategy, and we've launched a perpetual preferred equity. It's trading in the market. Like that was some of the best advice I've ever had. Like, don't waste your time and do that. Like, do the best idea. Like this is the best idea. And it continued to bring me there. So it helped shape what this podcast is today, the Investment Grade Bitcoin Podcast. And I was incredibly appreciative of it. I've had a few conversations with him since then, and it's like he's been very gracious with his time, very appreciative of it. But the thing I appreciate the most is he's so honest, and he's so true to himself, and he's so true to his brain. He's just listening to like whatever is coming to his mind, and he's like giving it right to you, and he's just like slamming it in your chest. So, and that's what happened to Danny. It's like he walked into a Bitcoiner's house. Like he walked into his house. Like that was gracious. That was respectful. Like Danny invited him in, like, and had a conversation. I'm sure like it was a respectful conversation. But like when the lights are on, like I'm gonna give you my thoughts. I'm gonna give you exactly what I'm thinking. I'm gonna like shove it in your face. So,
and I think he expects it in return too, right? Like I don't think people understand that this is truly how he's wired and what he thinks about all the time. I mean, I've never not seen him be focused on this. I remember even once when I was at dinner and I was at a table with him, and he's eating, and then all of a sudden he pops up and he just looks across the table at somebody and he goes, "What aren't we doing well, and how do we do better?" And like he really wanted answers. He wanted to hear what he wasn't doing good at and how he could improve it. You saw panic set around the table. I mean, but that's how he operates. Like he'll give you exactly what he thinks, just how he thinks it, unfiltered. And he'll take the time. You always see him pause, right? He always thinks about everything he says, but then he gives it to you, blunt. And that's pretty rare today, right? There's a lot of pleasantries that are exchanged. And to your point, Jeff, when you meet, guys that are in his position and billionaires and guys who really value their time, that's how they interact. Right. Mm-hmm. It's straight to the point. They're not going to beat around the bush. He's not going to couch it. He's not going to make it okay for you. This is what he thinks, and he's going to tell you exactly how he thinks it.
Yeah.
Jeff, I guess I'm thinking about how, like it probably took him more time to take a deep breath and sigh than it did to just obliterate your entire idea. It was just that quick.
was like,
But by the way, guys, look, we were at the Bitwise event and we were in New York City, and the event kind of had ended, all the speaking, and we went over and we were talking to Sailor. There's a whole group of this. So there's a group of people, it's a public setting. There were many people, everybody was asking him all kinds of questions. And so I had said to him, and this was in March of this year, and I said to Sailor, I thought this was a fabulous idea. I said, well, I said, I kind of have two ideas for you. I can run past. He's like, sure, Mike, what is it? And I said, did you ever think about stable coins and how that could potentially help you? He goes, why would I think about stable coins? I'm like, and then I'm like, well, wouldn't it make sense to issue MSTR stock in different currencies? And he's like, no, I could raise MSTR stock up in any dollar amount in US dollars, and the conversion can be done by somebody else. And then he proceeds to hand me my ass for the next 5 minutes. Some of you guys were there.
Yeah.
And I'm like, I just thought this was, and I'm like, okay. I just stood there and took it. Now, I will say this. Well, he then came out with a product called STRE.
He's got it
Right,
in a
which
different
is-
market.
Grain of
Right.
salt.
Right?
Sprinkling some salt on it.
Denominated in euros, and then he talks about it in Canadian dollars. So when I said that to him, I was like, I thought it was a good idea. Now, 9 months later, when STR came out, I'm like, I guess the idea wasn't that bad, right? But you know,
Yeah.
Yeah, if you're in this space, it's a matter of time before it's your turn, right? Like if you're vocal and you're sharing ideas and sharing your thoughts, it's a matter of time before you've got one that you let out that you didn't think through all the way. But I'll tell you what, it sharpens you.
Totally.
and I
Because
walked,
now
I
you
walked
know
around the-
you need to really think through what it is you want to discuss. Make sure you've actually thought about it deeply
Oh, totally.
before you just start throwing it around, which, we're on podcasts, we're throwing crap around all the time, but it's a better way to operate.
Right. At an event before that, I was, again, you guys, if you show up at an event and you're respectful and you wait in line, look, I mean, you could have a good chance of talking to Sailor, and depending on how many people there, you could talk to him for 3 minutes or 5 minutes. And I went to an event. I said, hey, I was talking, can I talk to you for a minute? He's like, yes, be fast. I'm like, okay. I'm like, I'm trying to figure this out. He goes, this is what you need to do. And he points at me. I'm like, oh, what do I need to do? He goes, use ChatGPT. Yes. Make sure you go into deep research mode, and then you have it really think, and then you let it sit there and think. Are you using deep research? I use deep research mode. Are you using it? I'm like, no, I'm not using deep research mode. I didn't know the deep. And I found out that deep research mode came out like 3 weeks before he said this. I'm like, I don't know about deep research mode. And he goes, okay, you got to ask these questions. I'm like, okay, thank you very much. He's like, have a good day. And then he walks, and I'm like, I didn't know deep research mode existed. So how would I know to use it? And because he knew about it. So again, it's just the style sometimes. And I didn't take it, and I continue to talk to the guy, in public settings. So that's what I'm saying, folks.
Yeah, you learn a lot from being around these things, and it's crazy going to an event like that because you see like a flock of people kind of like go around them and just kind of like listening to what's going on, especially those smaller events. But I mean, he'll sit there and he's super gracious with his time because he'll sit there and chat for 20, 30 minutes. I've seen him chat for like an hour with like a group of people around just watching. So it's a really cool experience being a part of like these events in person. Highly recommend it. I mean, it definitely builds conviction. If you're on the fence on any of these things, you could go meet these people in person and talk to some of the people that are operating in the space. And it's pretty impressive. Going to a Bitcoin conference for me, like back in 2024, it was a whole new experience for me. It like totally changed my perspective on like how much is actually being done behind the scenes and how many people are working in the space. Because sometimes, you just see numbers on a screen on a brokerage account, and it's hard to put into context. Cool. All right, we're at an hour 54. We've got a winner of the free ticket for the True North World. It is, I believe, and I think Kyle, if you don't mind putting it on the screen, the winner is Voyager 21M. There you go. Congrats.
Yo.
Boom. Voyager, you've been
Voyager.
around.
He's been around since the dawn of time. He deserves it.
For quite a while.
He's an OG.
we will DM you and we'll reach out. I appreciate you being here. Thanks for the retweet. and yeah, we'll be in contact on that. But I mean, maybe we'll pass it around. Final thoughts, so we could try to keep it within 2 hours, and we'll go from there. I mean, we didn't hit on so many things
Mm-hmm.
like the Fed, what's going on in Fannie and Freddie, real estate, through credit cards, um, points getting obliterated. I mean, war and chaos, everything going on right now. But maybe we'll have some little sideshows talking about that. But maybe I'll start with you, Dan. Final thoughts on what you're thinking about.
Sure. We didn't get to bring it up tonight, but I have a slide deck on volatility on Stretch. When Bitcoin fell 33% from its all-time high of 126 down to whatever it was, 80K or so, the volatility on Stretch spiked to about 18 or 19%. Right after that volatility spike, it's, all the press really had some serious red on that day. The USD cash reserve was announced by Strategy. Since then, all of the press have been trading extremely low volatility, and in particular, Stretch has been hitting the ATM, or has been hitting that $100 peg. So I think Strategy's been nimble, and they've updated their guidance with the USD cash reserve, and finally we're seeing some momentum with Stretch. So I think it's super exciting moving forward.
Yeah, all eyes on the next couple of days, because the ex-dividend date, if you wanted to be a part of the dividend payment for January, you needed to own the stock at the beginning of trading today, or at some point throughout the day today. And the ex-dividend date is tomorrow, and the record date, I think, is the day after that. So it'll be really
own it at the close of yesterday.
own it at the close of yesterday. So it'll be really interesting to see how it trades Thursday, Friday, because I think you have to hold it through that period, right? You've got to hold it through the 15th. So you got to hold it
15th,
through the close of tomorrow. So we'll really find out.
Just
on
open.
Friday.
Just open.
Yeah, they
open?
take the snapshot at the open of the market of all the holders, which is why you got to have it at the close the day before.
Okay.
So we'll see how it trades tomorrow. Yeah, if it's going to sell off, it's going to sell off right after the open tomorrow, today at this point.
But you probably expect it to come back in, right? Like if people are rolling to different places, they're going to go out, they're going to come back in, they're going to go into other things, maybe other yield products.
Absolutely.
And then look at rolling it back into Stretch. So we'll see how this goes. Cool. Pass it to Mike.
Hey, I just thank you. So I thought this was a different MSTR True North tonight. So I thought this was great content. I want to say congratulations to Dan Hillary launching Buck, which is a stable coin backed by Stretch. So I think that's awesome. Congratulations on your new role there. I think that's awesome.
Thanks,
And
man.
yeah, you're welcome. And it's always about constantly reinventing yourself. And so with that, let's just keep on doing it. And I think that by the way, Mason had a post today that was awesome. Mason Ford, who's part of MSCR True North, his post was buying Bitcoin sub $100,000 is like boomers buying houses sub 100K. I thought that was a great parallel that he said. So I'll end with that, and then can't wait to see you guys next week, and in Las Vegas.
Excellent. Thanks, Mike. Congrats, Dan. Over to you, Soleil.
Yeah, I got another message for the 1x MNAV bears. Like, let's say you're making a decent salary, 100K, 6 figures, good for you. And you've got 1 Bitcoin and you are getting your little 3% raises every year. When Bitcoin hits 1 million, do you know what your NAV is trending towards? 1x freaking MNAV, stupid head. So get over yourself.
Lol.
1x MNAV Ponzi bears. Yeah. Thanks, Soleil. Over to you, Ben.
Yeah, I'll just keep mine short. I'd say it's going to take a lot of us to continue to push Bitcoin forward. So be willing to tune out the noise, keep building, keep pushing things forward, right? We're going to win in the end. We all know this, but it's going to take a lot of us building to make it happen. So don't be afraid to keep pushing.
Bingo. That's in line with my final thoughts, is always be building. Yeah, it's going to take so many people to communicate this message and everything that's going on and everything that everybody's building here. Don't be afraid to talk about this stuff. And it's easier to communicate when you have rationality and numbers and graphs and charts and statistics and data. And historically with Bitcoin, that was pretty difficult to do. And now with some of these newer instruments that have hit the market with the perpetual preferred equity, you can create really compelling stories with data and graphs and analytics that are a lot easier to consume for people that are generally nervous about volatility. So go build something, keep operating in the community, communicate with people, and yeah, go to your local Bitcoin meetups, talk to other people, and talk to local businesses about, you know, how they're operating their treasury. Every business on the planet has a treasury. It's not just corporations. Like even your local carpenter or you know, your teriyaki shop or what, you know, whatever it may be, they all have treasuries. So it's good. If it's good for a person, it's good for everybody. It's good for businesses, good for corporations. So thank you, everybody. Appreciate the time. And that is it for episode 51 of True North, the Investment Grade Bitcoin podcast. Appreciate it. See ya.